So let's rejoin Jacques Cailloux to look at how Germany and Spain stack up against each other and really broaden things out, take a look at the rest of the Eurozone as well. So what did you make of Jim O'Neill's comments there, that we are seeing something of a turnaround in Germany with respect to consumer spending, that it's improving?
Well, I must say I couldn't disagree more. So yes, I mean, we've seen some improvement on the national accounts data. The IFO data on the retail side were improved, but I can't come to the conclusion that this is a definitive turning point for the German consumer. I can't, see a German consumer here becoming the powerhouse of the world demand environment. I don't think that 0.6 growth for German consumption will lift the rest of the world. So I disagree entirely. And I'm not sure that when we're looking at an environment where wage deals that were reached only a few months ago at 1.5% in nominal terms, that will be lost on the inflation front with real income growth at 0%, I just can't see where the consumption will come from. Yes, the labor market has improved dramatically. The short-term allowance work program has shrunk dramatically. We've seen job creations since February in Germany. So yes, there are improvements on the labor market front. But key to the German economy, in my view, remains absolutely the external sector. And what we saw since May is actually the first signs of slowing in foreign demand, which to me is actually quite concerning.
Yeah, I mean, Germany very much the engine of growth for the Eurozone. Do you think this momentum can be sustained in the second half of this year?
I don't think so. I think that, as I said, we've seen a turning point in world trade that started in May. We're now seeing a slowdown in world trade. We don't know by how much this is going to be slowing, but we know that this very, very important engine of growth for Germany and some of the other Nordic countries in Europe is going to be less present. And so I don't think we will have a substitute for that source of income growth, so weaker growth definitely. Now, the complication on top of this, given the difficult situation in the periphery, is that if we do get a marked slowdown in key export markets like we're seeing currently potentially in the US, I think the European economy is extremely exposed to that slowdown in foreign demand. I don't believe at all in stories about decoupling. This is a story which is coming back because we have a couple of indicators which are standing out in Europe, and it's true, yes, momentum is still there, but I don't think this is sustainable in the medium term.
What are the prospects for a double dip, if not an economic slowdown in Europe and the US?
Yeah, as far as the European economy, I'm very concerned at this stage. I was not so concerned 6 months ago. I'm now, very concerned that this could materialize. One, I don't think the policy response to the periphery has been forceful enough. The periphery is still fragile, and we see it from the market deterioration again. So periphery hasn't been taken care of. The policy response hasn't been forceful. ECB has stopped purchasing bonds. The major support has gone. And at the same time, the only source of income growth that we saw in the European economy is slowing, which is the export-driven recovery. So you've got two elements there which are particularly worrying. When 2 months ago we issued a double dip alert for the European economy, we said if the policy response would fail to restore confidence, then we would shift our scenarios to a double dip. I would recognize that the risks there have now increased even more.
Okay, well, we could, of course, continue this discussion, but for now, Jacques Cailloux, thank you so much for your insight. We appreciate it.